Vaughn is the co-leader of Dykema's merger and acquisitions practice. And one of what caught my eye was I got a press release, but it said that shows that 75% of respondents in a recent M&A market survey indicated that they were very optimistic about mergers and acquisitions, and highest it's been in 17 years. What's driving that, Tom?
A couple of different things. So first of all, our respondents told us current economic conditions are the number one reason why they view the next 12 months as being a very hot M&A market. And by the way, any of us who are practicing in the M&A market, this is in my 40-year career, this is probably the busiest year end that we have ever had. It's coming out a very, very busy year end. And economic conditions are no question about it. It is people see a recovery here. People's earnings are good, and a real opportunity, to sell your business. A good time to sell the business. I think the other thing that we're hearing from our respondents, which is the number two reason, is the availability of capital. We have more PE firms here in Michigan than we have ever had, and every day there are more and more firms coming along. We see people spinning out of the existing PE funds and setting up their own funds, and so all of those PE funds need to deploy that capital, and that's making for a very frothy M&A market.
So, Tom, I was just curious: could this also be partially a factor of demographics? You do have, tens of thousands of people retiring from the baby boom every week. Are they also the ones of them that own businesses are deciding now to sell their business? Is that part of it as well?
It is definitely part of it. We're not seeing a tsunami. We've always expected over the last few years to see this tsunami of business owners, baby boomers retiring and selling their businesses. My viewpoint on it is, hey, baby boomers, we all like to work for way past what our parents' retirement ages were. And I think what is going on right now is a twofold factor with the baby boomers. One is it is an excellent market. Their valuations are as high as they've ever been. And so they see an opportunity to take some money off the table. And with the PE structure, they're able to usually roll over a part of the equity, at least 20% of the equity. So they also see an opportunity to stay in the game and make some more money and kind of continue working for a longer period of time. And so I'd say I don't think it's a tsunami, but I think we see increasing numbers of baby boomers out there selling their companies.
All right. So I guess that was one of the things I was going to hit on too, is when you get back to your point of not retiring, I'm probably we're all, me, Matt, and you are all probably similar ages. And my father, worked till he was 80. And I get this a lot of times. People go, well, you're going to retire? And I go, to fish and golf? No, I don't think so. So, but certainly.
I don't like to fish and I stink at golf, right? Yeah. So.
Yes. Well, that would be exciting. I'd last about 3 months and go stir crazy. I guess maybe that's just the baby boomers. Our parents were Depression era parents, and they drove into us that we should work really hard, so that like them. So, but let's talk a little bit about what you're projecting out for 2022. Then we're 6 weeks away from the new year, 7 weeks, and this is really going crazy. Do you anticipate this is going to be like first, second quarter, same thing next year, or not?
Yeah, absolutely. So our respondents, 75% of our respondents said that they expect an increase in M&A activity in the next 12 months, which is basically most of 2022. It is kind of interesting. Pre-pandemic, and when we did the survey, because we've done this for 17 years, in the fall of 2019, our respondents were 1/3 positive on M&A, 1/3 negative, and 1/3 neutral. And then obviously the pandemic hit. I think people expected a recession at that point in time. But interestingly, a year ago, now we're 6 months plus into the recession, our respondents a year ago, 71% of them thought that the M&A market would improve over the next 12 months. They were clearly right on that. And then we did a flash survey last spring, 73% thought that the M&A market would continue to improve. And here we are in the fall of 2021, and we're up to 75. So you can see the sentiment is only on the total uptick. Also, we had 90% of our respondents thought that there will be uptick in private company M&A, back to our baby boomer comment, because obviously most of those baby boomer companies are privately held companies. And again, that's probably the highest number we've ever had on that response as well.
Hmm.
So you also mentioned, the survey also mentioned a lot of interest in the automotive sector, which is obviously something near and dear to our hearts here in Detroit. So talk about that a little bit, if you could, please. What is driving this in the auto sector? I know we've had successive waves of mergers and consolidations in the auto industry over the years, starting really in the 1980s, but you're thinking we're due for another one?
It's really interesting. The auto sector was listed by our respondents as the sector they expected to see the most M&A activity increase over the course of the next year. Interestingly, that was their perspective last year as well. And automotive actually typically ranks up there in the top 5. We see all the activity in the autonomous vehicles, the AV space and the EV space, as really being a big driver of some of the automotive activity here. And as if you followed it at all last year, the SPAC boom has been a big boom, and there have been lots of startup or early stage AV and EV manufacturers as part of that boom. So we think that's one of the factors that our respondents see automotive as a hot sector at this point.
However, the one near and dear to my heart, technology, not so much, right?
Yeah, I don't think any of our respondents are saying that we're going to see a fall off in technology deals. So they had to kind of rank which ones they thought were the most prominent. But interestingly, yeah, you're right. The tech slipped. Usually it's up there at 1 or 2. It slipped down to 4 this year in our rankings amongst our respondents. And again, we think that could partially be because of all the focus that the governments in the U.S. and around the world have had on, big tech. And the antitrust issues and other regulatory issues, that people are thinking that we might not see as much big tech M&A as we have seen in the past. I also think, tech is an industry sector, but tech is in everything. Tech is in automotive,
Right.
Tech is in fintech. Financial institutions was our number 2 this year, and or number 3. And come on, fintech is huge. Energy was number 2. Energy with the solar and renewable energy and battery storage and all that's going on there. I think we're seeing tech in all industries, and so it's pretty hard not to argue that tech is a big driver of M&A activity across the board.
Yeah, certainly. When someone says, where do I find technology? I say, where don't you find technology? It's amazing. I've been covering this industry for 40 years in various parts of the country, but it's been the last 20, I guess, where, maybe the beginning with the internet in 94 and all that jazz. But it just is exploded. It's everywhere. I can't think of any industry or practically any product that isn't touched by tech, right?
Yeah, absolutely. And if your company or your product is touched by tech, the valuations are significantly different. The multiples of earnings or EBITDA are significantly different if you have a technology company than an old, brick and mortar, type of business.
Yeah, those buggy whips kind of went out of fashion there for a while. So go ahead, Matt.
Well, I was just curious. You also talked about the availability of capital as being one of the big reasons for all this activity. So talk about the availability of private equity. I know private equity, venture capital, all of that stuff has been sort of a sore spot here in Michigan in terms of availability. But I guess across the board, it's improved, and I'm assuming it's also improved here in Michigan.
Yeah, absolutely. And I think to some extent you have to separate the PE and the venture capital.
Right,
so
sure.
PE, yeah, private equity. It's an industry that when I started practicing didn't exist, and that has since developed and really has made for a totally different, I think, deal dynamics. And so I don't think we always can predict what's going to happen in M&A, based on history, because suddenly now we have this capital that has to be deployed by these private equity funds over a period of time. And so they need to do deals. And I think that is a big factor of driving M&A, and it's going to continue to drive M&A in up and down markets, because that PE fund those funds are going to be there still. And, the way they're structured is if they don't deploy them within a certain period of time, they have to give the money back to their investors. And nobody wants to give money back to investors, for sure.
Yeah, I'm seeing that a lot. Money on the sidelines for a long time because of COVID, or partly because of COVID. And suddenly, like you say, they've got to use it or lose it. And suddenly the motivation is much higher. For instance, we've been looking at some real estate investment trusts that have been kind of quiet, but now they're just very active right now.
Yeah. Well, and I think the SPAC boom is a piece of that. I don't know how much you guys know about SPACs. They're special purpose acquisition corporations, and they go out and raise publicly a pool of money, and then they go and do one single acquisition to invest the money. And it is an opportunity for retail investors basically to get involved in PE, private equity, type of deals where they don't really have access to that right now because PE firms are looking for, just a high net worth individual. So the SPAC boom is definitely another game changer here in the M&A space these days.
Matt?
So along with all this growth in the market itself, there's also been a growth in the entire sort of background infrastructure that's required to do these deals, right? So is that infrastructure in place and healthy and in good shape here in Michigan?
Absolutely. One of the really amazing things about the Michigan M&A market is that we have an amazing group of lawyers, accountants, investment bankers, and bankers who do M&A on a regular basis. I'm on the board of a group called the Association for Corporate Growth, which is a national association of middle market M&A professionals, and we are a very active chapter, and we are very, very lucky in the Detroit area to have really a full panoply of M&A professionals, to support deals and deal sources on it. And I think the other thing that's really interesting, just quickly, is COVID-19. We've all learned how to adapt and get deals done in COVID-19. And I think there's a sector that thinks we're doing deals even more efficiently because we're not hopping on planes and we can hop on Zoom calls in a real quick period of time. So I think the local market has adapted extraordinarily well.
Okay. So we're coming down to the end here. As you can see, our next guest has joined us. Everybody, the audience can't see it, but I have a virtual green room where I can see everybody lined up. So why don't you go ahead and talk a little bit about how folks can learn more about Dykema and reach out to you or get more information?
Yeah, that's great. As you mentioned earlier, so I'm co-head of Dykema's M&A team, and Dykema, I'm based obviously in downtown Detroit. You can see it back there, and we have offices in Detroit, Bloomfield Hills, Ann Arbor, and Lansing, as well as Texas, California, Minneapolis, and Washington, D.C. And Dykema.com is our website, and the survey results are published there. There's lots of other results of the survey that we didn't talk about that are very interesting. My email is tvaughn, VAUGHN, @Dykema.com. And people are free to reach out to me if they have questions or want to talk a little bit more about M&A. We have M&A professionals in the Detroit area. It's kind of across the country, and frankly, are doing deals all over the country, which has been a fun, great experience. And I love doing this survey. So I've been involved in the survey for all 17 years that we have done the survey. And it is really one of the most fun things that I do every year.